Welcome to FinTech TV. I'm Remy Blaire. We're here at Solana Accelerate in New York City on Pier 36, and now I am joined by Robinson Burkey, who's the co-founder of the Wormhole Foundation. So Robinson, thank you so much for joining me. Great to have you here.
Thank you for having me. I'm excited.
Well, first and foremost, this is the final day of the Solana Accelerate conference, and what a week it's been. We started the week with focus on developers, now today on policy, and yesterday, as well as today, has been on the institutional side. So I understand that Wormhole is carrying some of the biggest names in finance. So for our viewers who may not be as familiar, tell us what's going on.
Yeah, so Wormhole is effectively connecting all these different blockchains. So we're starting to see a lot of institutional adoption through RWAs and assets coming on-chain. Yes. And a lot of people, when they think on-chain, I use a similar term online, as we're all very familiar with. That's how I think on-chain. But we think about all the chains. So there's Solana, obviously, while we're here today, but there's many, many other blockchains. There's actually hundreds. So they all need to be connected somehow, and the assets or the value need to transfer between them somehow. And so Wormhole helps enable that.
And when it comes to infrastructure, give us an idea of some of the opportunities as well as challenges when it comes to multi-chain infrastructure.
Absolutely. So when we talk to institutions today, like BlackRock or Apollo, and they issue their funds on chain, it's pretty technically difficult and takes a lot of time to issue across a number of different chains. So what we're seeing a lot of them do, and what we do with our partner Securitize, is they'll issue on one chain or maybe a few, and then they use Wormhole to be able to access them all. And when you think about why that might be important, is that the crypto investor class is becoming an investor class in its own right. And so institutions, when they come on chain, they want to access the entire addressable market, not just the addressable markets of Solana, although we're here today because of Solana. It's one of the most active chains, but so are Ethereum, these other chains that also have RWAs, lots of users and lots of assets.
And here at the Solana conference, today is the final day. We heard from several policymakers as well as Congress people. We know as we're speaking, overlooking the floor, there are others speaking as well. But when it comes to the regulatory landscape here stateside versus, say, what's happening in European markets or the Middle East or even in Asia, what do you think needs to happen when it comes to stateside?
Yeah, so I think we need to start from the coming on-chain, and I say that because there's a process to get on-chain, right? So we have DeFi, decentralized finance, where you're able to move freely, permissionlessly. You don't have to do things like KYC, KYB. That's a whole world we need to get to, but right now we need to focus on things like stablecoins. Stablecoins are what a lot of people call the killer app of crypto. Right? And so I think a lot of the regulation is focused there, rightfully so. We've heard a lot of the speakers today discussing some of the bills and acts that are out there. I think we need to bring those to the finish line and realize those. And I think America in particular can take back their position as the crypto capital or drive the innovation forward from here. But we need to start moving on a lot of specific things around RWAs, around stablecoins, around KYC, KYB, and what it looks like for someone to come on chain and start using some of this new technology.
Yes, and it's interesting that you mentioned that because we've been hearing from the speakers as well as the attendees here. And earlier this week in New York City, there was the first inaugural crypto summit being held by New York City Mayor Eric Adams. So it really does speak to some of the activity as well as the feedback from the community. So before I let you go, when it comes to the growth as well as future outlook for crypto here in the US, what do you see as the next major category of institutional assets to be tokenized?
Absolutely, and maybe taking a quick step back, I think what's we're seeing here in crypto, what Solana does a really good job of is being very pragmatic about the approach. So if you think about crypto and where it started, it was a lot of cypherpunks wanting an alternative system. They had very big dogmatic beliefs. And where we've come from, and especially with Solana, they embody this ethos quite a bit, is being more practical about their approach, right? What is too much centralization versus not? What regulation do we want? What do we not? Let's solve problems now, that sense of urgency. And so I think that what we're seeing here this week is really encouraging for, again, America kind of being that crypto capital, if you will, and especially New York. And in terms of RWAs and institutions we're seeing come on chain, one of the exciting things, or at least I'm excited about, is private credit, right? And so when we think about this concept of democratizing finance, what does that really mean? There's certain people that have access to certain things. How do we get as many people to have access to the same thing as possible? For instance, stablecoins. That's the entire world getting access to the dollar, right? And when we think about private credit, it's this financial vehicle that's largely been reserved for people with certain brokerage accounts of high minimums, if you will. They have to have a certain amount of money to purchase private credit. But now when you tokenize it on chain, you can open up that particular investment vehicle that has been reserved for high net worth individuals to many, many more people. And that in and of itself is democratizing finance. So I love to see private credit in particular come on chain. I think treasuries are great, but as we move more towards these more complex instruments and truly democratize finance, that's when I think things get really exciting.
One more question that I thought about, Robinson, before I let you go is, it's interesting, we're at an event for Solana as well as crypto here. And when we think about what's happening here in the US, given a lot of the tariff uncertainty, we've seen bond markets affected as well as US equity markets. And the thing is, all these markets are connected, and DeFi versus TradFi, it's not segregated anymore. So when it comes to the future of finance, especially what we're seeing right now, what do you think it'll look like, not just the end of this year, but let's say 5 or 10 years from now?
So I think what we're starting to see is a lot of the traditional financial market come on chain, just to continue to use that topic. I actually think as more of that comes on chain, we'll start to see the coupling, if you will, of the markets stay tight. But what we want to see, and at least what my goal is how do we drive as much of the traditional market on chain, because we believe it's more efficient. As time goes on, let's say on a 2, 5, 10-year time horizon, as time goes on, more activities on chain, I think we'll see the market separate a little bit from the traditional market. But my short near-term thoughts are there's actually going to be a tighter coupling, because those RWAs that we've been talking about coming on chain are just going to make them more intertwined, right? And so we'll need to see DeFi grow quite significantly. It already has been, in order for us to see that decoupling.
Well, we could do an entire podcast on this subject, but we will have to leave it there. So thank you, Robinson, for joining me.
Thanks for having me.